Welcome everybody, and today we are going to understand the topic time of supply. Very super easy topic actually. Within no time we'll be understanding this. Okay. So what is time of supply? We already discussed in chapter 2 that supply means what? Right? It is either supply of goods, it is either supply of services. So GST covers both. Now supply is important. It is a taxable event. So we'll tax when the supply happens. But when the time is most important. Because ultimately, we have to give the record of supplies to the government, the data of supplies to the government, and pay the required taxes. And that's why whenever any transaction happens, whether it is relating to supply of goods, whether it is in relation to supply of service, what is that time which is important? And that's what we are going to learn in this chapter. Now, why this chapter actually becomes more challenging or uh, analytical? Because there are many events relating to a single transaction, right? Suppose example, you order a product on Amazon. Today we ordered, maybe after 4 days they delivered, and you paid on that day. So the date of contract is different, the date of delivery is different, maybe the date of payment is different, maybe they send the invoice day after tomorrow. So are you able to understand? So in business scenarios also, the date of making the bill, that is invoice, the date of payment, date of supply of goods, that is delivery of goods, all these may be at different dates. So what should be treated as supply? What should be treated as the time of supply? Because in supply process, all these are important. But what is the time of supply? So that the documentation should be done with government, that is filing it in the returns, paying the taxes, all that can be done. So that's why we should actually understand the time of supply. So in short, if I ask you, you should tell, sir, to decide the date of payment of GST, to decide the date when the return should be filed for such transaction. Time of supply matters. Now for goods, the time of supply is different. For services, the time of supply is different. Because the events are different in both the cases. Right? In goods, you deliver the goods. Right? In supply, you provide the service. So there is a difference in these two. Otherwise than that, both have payment, both have invoices. Correct? So that's why there are three sections in this chapter. First is time of supply of goods, that is section 12. Time of supply of service, that is section 13. And change in the rate of tax, section 14. So 12, 13, 14. 12 relates to goods, 13 relates to service, 14 relates to change in the rate. Okay. So let's start with goods. Time of supply of goods. Now focus everybody. You will understand. What they said, that section 12 subsection 1 says the time of supply in relation to goods shall be determined as per the provisions of this section. So that means section 12 will determine that what should be the time of supply in relation to goods. Okay, 12 subsection 1 done. So 12 subsection 1 actually gives the power to this section. Okay, that okay, we'll decide. Now 12 subsection 2 says, okay, I'll talk about forward charge mechanism. Now, because we completed charge of supply, you know what is forward charge mechanism, correct? Where the supplier will collect the tax from the recipient and pay to the government. So in simple language, I am selling the goods, you are buying the goods. So along with the price of goods, if I collect the GST and then that GST I deposit with government, so I am the supplier, you are the recipient, and this mechanism is called as forward charge mechanism. So section 12 subsection 2 talks about time of supply in case of forward charge mechanism. Now, obviously when I am selling the goods to you, I'll give invoice to you, correct? I will collect payment from you. Receipt of payment will be there, correct? And I have to deliver the goods to you, right? So these three are very important actually to discuss. So based on that only, this section 12 subsection 2 is written. Now section 12 subsection 2 says that the time of supply is either the date of issue of invoice. That means the actual date of issue of invoice. And second part they are telling, or the last date of issue of invoice as per section 31. Actual date of issue of invoice or the last date of issue of invoice as per section 31, whichever is earlier. Now date of payment is there, but as per notification, the date of payment should be ignored. So we are not going to talk about it. So only two things left for us to discuss. One is actual date of invoice. Second is last date of issue of invoice as per section 31. Now, what section 31 talks about? It says that okay, if you have to issue the invoice, please think, are the goods going to move? Will there be any movement of goods? Like example, from one place to another, the goods should move, correct? Whenever you order on Amazon, what happens? There is a movement of goods, right? Whenever you actually go to the market and tell that these are the goods supplied to my shop or supplied to my house, there is a movement. So whenever there is a movement of goods, the date of removal of goods is the last date for issue of invoice. I am telling last date. That means invoice should be issued either before or on this date. Okay? Sure, done. If there is suppose no movement of goods, from supplier side there is no movement. That means customer is only coming, taking the goods and going. So we are delivering, correct? Or we are making the goods available to the recipient. Like example, I sold the building along with all the furniture. So I did not move the goods, correct? I just sold the building along with furniture. So in that case, without movement, I just made these goods available to the purchaser, the recipient. So if there is no movement, this can be the reasons. So what did we discuss? If there is a movement of goods, then obviously the date of removal is the last date. If there is no movement of goods, then the date of delivery or making goods available, that is the last date. But suppose if there is a continuous supply of goods, then if continuous supply of goods is there, obviously what will happen? Some supplier will definitely issue some statements, correct? Like I'll tell you, if you are continuously every day, the milk vendor supplies milk to your house. So continuously he is supplying milk to your house. Continuously, suppose you are getting gas through the pipelines, continuously HP gas or Indian gas, whatever gas company is there, it is supplying the gas to you, that is goods to you. Similarly, electricity companies supplying electricity, right? So these are all goods. Electricity is goods, gas is goods, correct? So because it's a continuous supply of goods, the date of the statement, so they will generate a statement, either consider that date or the date of payment, whichever is earlier. So in case of continuous supply of goods, the date of the statement or the date of payment, whichever is earlier, is the last date. Now come to the fourth case, sale on approval basis. Now you supplied the goods to the recipient. He will check. If he is satisfied, he'll say okay. If not, he will return the goods. Now there are goods which actually are kept for longer periods for approval. Like if you order a mattress, they simply give an advertisement, you remember? Use it till 90 days. If you are not satisfied, return it. And if you are satisfied, keep it. So that's how they are confident and they are supplying. So sale on approval can go long period. So that's why government, considering all the situations, government said, okay, today you are delivering the mattress. Correct? Today you are delivering the mattress or removing the goods from your factory to the user. Correct? From that date, either within 6 months or at least the customer gave the consent that yes, I liked this product. So either the date of consent or 6 months from the end of the removal, whichever is earlier, will be considered as the last date of supply of goods. Right? Sorry, last date of supply of invoice. This way you should be able to understand. Now let me actually talk to you in detail. This is clear. Now, if you get a question, how will you solve it? Date of invoice, it is straight as it is given. So you'll take it. And then you see out of these situations where actually the case falls. Is there any movement of goods? If yes, then see when the goods were removed. If there is no movement, then see when it is delivered. If suppose it is a continuous supply of goods, then when the statement is generated or payment made, whichever is earlier. If it is sale on approval basis, then see, okay, from the date of removal, what is the last date, 6 months, or the consent, whichever is earlier. And whenever you check the last date, I'll tell you like this, you have to consider. Suppose July 1st, they said that they actually sold the goods on approval. So what would be the 6 months? So after 6 months, January 1st comes, correct? So don't take January 1st. Take December 31st. That means whatever date on which the goods are removed, just calculate 6 months and take the time which ends. Like I'll tell you, July 1st, 31st December. If it is suppose Feb 1st, then Feb, March, April, May, June, July. So July 31st. If it is Feb 10th, then definitely July 9th. Correct? Oh, am I right? Wrong. March, April, May, June, July, August. So it is August 9th. Correct? This way you are supposed to remember. Okay? So you have to calculate these periods. Right? So what I wanted to tell you that 6 months, this date counting you should be able to clearly do. Right? If it is Feb 1st, what I said? March, Feb, March, April, May, June, right? July 31st, I said. I'm right. Correct? So July 31st is right. And if it is 10th Feb, then 9th August is perfectly right. Right? This way you should be able to think. Then you have to compare with the consent date also. Then take whichever is earlier. So first apply this section 31 and decide one date by deciding what are the cases are applicable. Then compare it with the date of invoice. Then say whichever is earlier. Don't mess up. Right? Keep date of invoice completely separate. Right? Here no invoice date is useful for section 31. Correct? So that's why invoice date is separate and this removal of goods, delivery of goods, statement, payment, 6 months from the date of removal, right? Consent date. These are essential, right? So with this, you have to actually complete the problem of time of supply. Very easy concept, correct? Now, I want to tell you that date of payment is irrelevant. But what is the date of payment? Basically, date of payment is date of entry in the books or the date of credit in the bank account. What is date of payment? Date of entry in the books or date of credit in the bank account, whichever is earlier. So date of entry in the books or date of payment, whichever is earlier. Now what they said, that suppose you have to get 800 rupees for supply of goods, but they gave 1000 rupees. So they paid 200 rupees advance. Now this 200 rupees advance is within the limit of 1000. So if any excess payment up to 1000 rupees you get, you have an option whether to issue a fresh invoice for that or adjust in the next invoice. But the point is, this data, this information is completely relevant in today's context. In relation to goods, this is completely irrelevant. Why? Because you see the third point in this page. Notification number 66, 2017. What it says? In relation to forward charge mechanism, only for forward charge mechanism and only for goods this notification is. Right? And that too for regular taxpayer only again. Okay? This notification is applicable to the regular taxpayer, the GST registered person, right? That too who is paying tax in forward charge basis, correct? For them only this notification applies. That payment is irrelevant. That's why I discussed that only either check the date of invoice or the last date of invoice as per section 31, whichever is earlier I said. Why I ignored that B point date of payment and then I wrote in bracket irrelevant? Because of this notification only. Why I said advance received up to 1000 rupees, you have two options, that is also irrelevant. Because in relation to goods, if it is forward charge mechanism and you are a regular GST registered person, then the payment is irrelevant. The entry in your books or the credit in bank account are both are irrelevant. Right? But if suppose you are paying tax on reverse charge basis, then date of payment can be considered. No problem. Right? Only for forward charge the payment is irrelevant. For reverse charge the payment is relevant. Right? Forward charge, time of supply in case of forward charge of goods, for that payment date is irrelevant. But if it is reverse charge, payment is relevant. Okay? If it is composition supply, payment is relevant. If it is, I'll tell you, if some GST is payable on actionable claims, specified actionable claims, like online betting, gambling, correct? Lottery. So these type of things are there, na? For that, the date of payment is relevant. Right? So now this notification number 66, 2017 clear. What it says? Simply says that for computing, deciding the time of supply, in case of forward charge for goods, date of payment is irrelevant. But when it comes to reverse charge basis for goods, when it comes to actionable claims, specified actionable claims, or when it comes to composition scheme, the date of payment should be considered. Right? This way you should be able to understand. Suppose in the exam they give actionable claims as a concept. On that they want to compute time of supply. Then you will apply A also, B also, both. No need to take tension. Okay? Right. So we understood this also. Now come to reverse charge basis. So section 12 subsection 3 talks about time of supply in case of reverse charge. Very simple. Now in reverse charge, who is going to pay the GST? Basically the recipient. Basically we can say buyer. So if government don't have the trust that supplier will pay the tax, or supplier is mostly into unorganized sector, and the purchaser, the buyer, the recipient is in organized sector, then in that case government said that please pay tax on reverse charge basis. And accordingly, time of supply also should be charged on reverse charge basis. Now here, earlier of the three should be considered. To decide the time of supply, the date of receipt of goods. Now we are talking about buyer, so buyer will receive, correct? So we are talking about date of receipt of goods or the date of payment. Now date of payment has two things. Date of entry in the books of accounts of recipient of goods and date of debit in the bank account. Debit. Why I use the word debit? Arey bhai sahab, you are the buyer, you will pay. So in your account it would be debited, correct? In forward charge, it was supplier who will get the money, so credited. In reverse charge, the buyer is going to pay, so debited, correct? This way you should understand. Now, time of supply is earlier of the three in case of reverse charge mechanism. Date of receipt of goods, date of entry in the books of accounts of recipient, date of debit in the bank account of the recipient, and ultimately the 31st day from the issue of invoice. So when we solve the problems, ignore the date of invoice. After that, take the 31st day. If you are able to do this, you will get correct answer. Ignore the date of invoice and after that calculate the 31st day. Right? So that's what they said. Now these four items are there. Date of receipt of goods, date of entry in the books of accounts of the recipient, the date of debit in the bank account of the recipient, and 31st day from the date of issue of invoice. Check these four and whichever is earlier you write. That is the time of supply in case of reverse charge mechanism. Okay? Right. Now, 12 subsection 3 done. What is 12 subsection 4? It talks about vouchers. Now, here when we talk about vouchers, it is not about the points which are adding, right? Today, every mobile app, whatever courses you do, whatever products you purchase, they say we are adding coins to you. We are adding some points to you. So whatever these points are added, coins are added, all these are not considered as vouchers. Right? When it comes to voucher, please remember, you should get some goods out of it. Then only we can say it is a voucher. Right? Either you should be able to take some service, then it is a voucher. Right? Merely just some points are added, accumulated, these type of things are not vouchers. Okay. Now, is the voucher issued which is identifiable with the specific, right? Voucher issued to purchase kaju. Voucher issued to purchase kaju katli. Voucher issued to purchase fresh vegetables. So that means you show this voucher and get the vegetables. Show this voucher, get that kaju katli. So if it is identifiable with the product, then GST will be the time of supply will arise at the time of issue of invoice. But if suppose a general voucher is there, they gave 10,000 rupees voucher to you, you go and purchase anything you want. You can purchase garments, you can purchase shoes, you can purchase blazers, you can purchase groceries, anything, your choice. A general voucher. right? So in that case, what will happen? If a general voucher is given to you, then when the voucher is going to be redeemed, that matters. When the voucher is going to be redeemed, when the voucher is going to be redeemed, this is important. And whenever the voucher is going to be redeemed, at that time, the time of supply arises. So I'm talking about 12 subsection 4. I'm talking about voucher. So if the voucher is identifiable with specific goods, then at the time of issuance of the voucher, the time of supply arises. If it is a general voucher with which any goods can be purchased or taken, right, without paying any cash, then the day when the voucher is redeemed. This you should be able to understand. Now 12 subsection 5, let us come to. It talks about residuary cases. Now, neither there is invoice, neither there is something called as supply. No records are available to you. In that case, if the person files the returns, then the date of return is treated as the time of supply. Don't have any data. So the time of supply is the date of filing returns. But if suppose you don't even file the return, because there are many businesses which run in black, the GST officer did raid on such premises. They understood that this is so much of supplies you did, on this you pay the tax. Now he had no choice except to pay the tax. So the day when he made the payment, that becomes the time of supply. So in residuary cases, balance cases, if something is not covered in section 12, subsection 1, 2, 3, 4, then subsection 12, section 12, subsection 5 will apply. That when periodical return is filed in the GST website, at that time, the time of supply is, or if the payment is made to the GST portal, the date of payment. Okay. So if return is not there, then only payment will be considered. Okay. Now come to 12 subsection 6. 12 subsection 6 talks about time of supply in case of interest late fee penalty. 12 subsection 6 talks about interest late fee penalty. Now when we talk about interest late fee penalty, now it is nowhere goods, correct? But if you delay in payment, they may charge interest. The supplier may charge a late fee, some penalty. In that case, what should be the time of supply? Right? Because the buyer will pay along with the price this interest, this penalty and all. So the government clearly said the date on value addition. The date on which the value addition is done. That means the additional payment is done for interest, late fees, penalty. That date. So in simple language, I'll tell you the date on which the payment of interest, penalty or late fees occurred, that is the time of supply under section 12 subsection 6. So super, you understood complete topic, right? Revision also will did, correct? Again, I am repeating for you. Hey, time of supply, why it is important? To decide when to file the return and when to pay the tax. Then 12 talks about, section 12 talks about time of supply of goods. In that 12 subsection 1 says the time of supply of goods is covered under this section. 12 subsection 2 talks about forward charge mechanism. Either the date of issue of invoice or the last date of issue of invoice as per section 31, whichever is earlier is the time of supply. Date of payment is irrelevant here, right? Forward charge mechanism, it is irrelevant. Okay. Then section 31 says if there is a movement of goods, the rate of removal. If there is no movement of goods, the delivery of goods or making the goods available. If there is continuous supply of goods, then obviously the date, statement date or payment date, whichever is earlier. If it is sale on approval from the date of removal within 6 months or the date of consent, whichever is earlier. Now out of this section 31, you have to identify which case will apply and decide the final date as per the rules. Compare it with invoice, whichever is earlier. Then come to the next page, you see that advances up to 1000 rupees. Irrelevant topic for us, right? Obviously, whenever there is an advance also, it would be adjusted in the next invoice. This much you remember, it's enough, right? Then date of payment is date of entry in the books of account or date of credit in the bank account, whichever is earlier. Then we discussed notification number 66 2017. What it talks about? Arey bhai sab, listen. In case of forward charge mechanism for goods, date of payment is irrelevant. But for reverse charge, but for composition levy, but for actionable claims, right? These three cases, still the date of payment is relevant, right? Now, reverse charge also, composition also, actionable claims also. I said these are goods related matters. And the date of payment is relevant for these three. Then 12 subsection 3 we have to discuss. Reverse charge basis, if you are paying GST, then what is the time of supply? Obviously, the date of receipt of goods, because you are the buyer going to pay GST, date of receipt of goods, date of payment, and 31st day from the date of invoice, whichever is earlier. Now, suppose there are some assessees who don't give any of such details, right? So, what to do? In that case, the date of entry in the recipient books matters a lot. Suppose, example, a teacher is teaching with me. Now, I have to make the payment to him for the service, for the teaching what he did. Now, I want to make the payment to him, but he is not ready to give invoice. What should I do? Neither I made the payment, nor the service is complete. If this type of situation comes, right, then what they say is, if recipient enters in his books, that's enough. So I gave service example. Similarly for goods, okay, that date of entry in the books of accounts, right? Then we discussed about 12 subsection 4. Voucher is identifiable with particular goods, specific goods. Then the date of issue of invoice. In all other cases, the date of redemption. Because at the time of redemption, you will know for which goods you are using the voucher. And goods will decide the rate of GST, right? Then 12 subsection 5 residuary cases, either the date of filing the returns can be the time of supply or the date of payment if return filing date is not available. Okay. Then finally, if it is late payment, penalty, interest, then definitely the date of value addition, that is actual date of payment, is the time of supply. With this, the time of supply of goods are complete. Now let's start the time of supply of service. Time of supply of service is given under section 13. Now 13 subsection 1 simply says that time of supply of service is given as per this section. So section 13 subsection 2 says that time of supply of service in case of forward charge. Now, how to decide? For goods, it is completely different, right? Because there is something called as delivery of goods, there is something called as movement. So the story was different. But here, in case of forward charge, time of supply will be based on a simple question. Is invoice issued within the time limit given under section 31? Within the time as prescribed under section 31. If the answer is yes, as you can see in the table, the first item, right? Then you will take the date of invoice or the date of payment, whichever is earlier. If suppose the answer is no, then you will get the second item in the box. That is, the invoice is not issued within the prescribed time under section 31. In that case, the date of supply of service or the date of payment, whichever is earlier, should be taken. Okay. And third thing, sometimes what happens, the services are continuing. So when services are continuing, you cannot tell that the date of completion of service also you cannot estimate. Sometimes invoice is also not issued. Sometimes you don't even get the records of payment, right? But you found that in recipient's book, you have some entry. These type of cases only come when there are search seizure and you find some books of accounts or documents or records where you find the receipt of service. So in such other cases, the date of entry in the books of accounts of the recipient should be taken. Now repeating for you again. Section 13 talks about time of supply in case of service. 13 subsection 1 says, as per this section, time of supply for service should be determined. 13 subsection 2 talks about forward charge mechanism. Now, in supply, what are the ingredients you tell me? You will supply the service, correct? So, whatever is the last date of supply of service, that can be considered. Or there is another thing, that is invoice. Or third one, payment. That's it. So, government cannot actually rely completely on the businessman. Government says that we should put some bars, some limitations. So that they put it in section 31. For goods also section 31, for services also section 31. So what they say, that in the first point, did you issue the invoice within the time prescribed under section 31? If yes, the date of invoice or date of payment, whichever is earlier. If the answer is no, that invoice is not issued within the prescribed time under section 31, then the date of supply of service or the date of payment, whichever is earlier. And in all other cases, the date of entry in the recipient book. These are very important to remember. But what is section 31 so special? What it says? It says that I gave you service. Now, when I gave the service and my service is also completed, now will I keep quiet like that? Or I'll definitely issue invoice so that I can collect the money from you. Obviously, I will issue invoice. So how much late I will issue invoice? In reality, if I gave service today and today it is complete, I'll give today only invoice, correct? Okay, maybe there is a delay. 1 day, 2 day, 3 day, 1 month, correct? So that's why government said that the last date, the maximum time within which an invoice should be issued should be 30 days from the provision of service, supply of service. Suppose if it is a banking company, non-banking finance company, if it is an insurance company, okay, we'll give 15 days extra, right? Within 45 days, you issue invoice. So, whenever you solve problems on time of supply of service, what do you have to do? Your starting point of solving the problem should be when the service was provided. Or I can say the date of supply of service. Now take that date. From that date, you add 31 days. Because following date they said, no, that's why I'm saying add 31 days. Once you get that date, this is the maximum benchmark. First step done. Then compare this with the date of invoice. If date of invoice is before this date, then no problem. The date of invoice or payment, whichever is earlier. If date of invoice is after this 31st day, then the date of supply of service or payment, whichever is earlier. And in any other case, anyhow, you know, entry in the books of the recipient. So for normal cases, 31st day you remember. For banking, insurance, NBFC, 45 days plus 1 day you consider. Okay. But this is one time service, you will do like this. But suppose if it is a continuous service, like your internet connection, your mobile bill, correct? It is a continuous supply of service. You have purchased some Microsoft 365 subscription. You have purchased some subscription of Google Workspace. You have purchased some Geo Cloud services. So these are continuous supply of services, correct? So if there is a continuous supply of service, then definitely you would have decided some date of payment, correct? That on this day I'll pay. So whatever is the date which is ascertainable, that means the date of payment is ascertainable. Then you issue the invoice before that date. Sometimes what happens, the date of payment is not ascertainable. But of course you will make the payment, right? Like example, you have given to a contractor to construct the building. Now as the events actually go on, you pay some money or he may demand sometimes. So there is no fixed rule that today it should be paid or tomorrow it should be paid. So the date of payment is not ascertained. In that case, whenever the date of payment is made, before that you issue the invoice. Are you clear? Sometimes the payments are linked to completion of certain events. Then in that case, no problem. Let that event be completed. Immediately before that or on that date, you issue the invoice. So we are talking about continuous supply of service. The question arises that because it is a continuous supply, you have to actually stop somewhere. That means break the services into periods. So let us take payment as the basis for breaking the periods. Correct? So if payment date is ascertainable, before that date you issue the invoice. If payment date is not ascertainable, before the date of payment you issue the invoice. If payment is linked to some event, before the date of completion of the event, you issue the invoice. Correct? So once you get the last date for issue of invoice, that is prescribed under section 31, then we will go to the original table which we have seen. Right? Is the invoice issued before this, within the time? If yes, the date of invoice or the date of payment, whichever is earlier. If no, the date of supply of service or the date of payment, whichever is earlier. If both the situations cannot be applied because of lack of information, then date of entry in the books of the recipient. That's how we studied. But when I am talking about section 31, I already said, okay, generally it should be, invoice should be issued from the 30 days from the end of completion of service, or banking, non-banking insurance, 45 days should be considered. Okay, after the 45th day, that means 45 plus 1. After the 30th day, 30 plus 1, correct? That's why I said 31st. That's why I said 46th. But if it is a continuous supply of service, then if payment date is ascertainable, the date of payment, before that you issue invoice. If it is not ascertainable, before the date of actual payment, you issue the invoice. Or if it is linked to an event, payment is linked to an event, before the completion of the event. This way you are actually supposed to remember the topic. But what is continuous supply of service? The answer is, if any supply period continues for more than 3 months, then we call it as continuous supply of service. Suppose you have taken internet connectivity for 2 months. After 2 months, you are not going to pay. Then it is not continuous supply of service. Then you put it under the first point which we discussed under section 31. Okay? But if you take it for 3 months, 6 months, 9 months, 1 year, then you apply the second point, that is payment ascertainable, payment made, linked to event, all that. Okay? Because continuous supply of service means at least for 3 months it should be provided. But sometimes the bad luck happens that the provision of service, the supply of service is stopped abruptly in between. In that case, if the supply of service has been stopped, then the time of supply will be the before the date of cessation of service. Right? Before the date of cessation of service. So this way you are supposed to remember. On this case studies will come. Yes, they will tell that supply we agreed on this date, right? It is for 6 months or 1 year like that, right? Then they will tell that the supplies were continued, but suddenly one day stopped. So okay, the day when you stopped is the date of cessation of service. Before that, the invoice should be issued. We take a lot of subscriptions. Netflix subscription we take, Amazon Prime subscription we take, Google Workspace subscription we take, Microsoft 365 subscription we take, quick antivirus subscriptions we take. Yes or no? Someday or the other we abruptly stop it or not. So before cessation, the invoice should be issued. I wanted to tell. Okay. Now, suppose you received an advance up to 1,000 rupees. In goods, I said that is irrelevant. This topic should not be studied, I said. Why? Because as per notification 66 2017, for goods, payment is irrelevant. But services says we are perfectly fine. We don't consider payment as irrelevant. Right? So for services, payment are relevant. So that's why advances up to 1,000 rupees, what to do? Either you can issue an invoice now because you received extra amount, or you can adjust in the next invoice. It's your choice, it's your option. Okay, right. So what did you understand? You issue an extra invoice now or adjust in the next invoice. It's your choice. Both are fine. Right? But if suppose the advance received is more than 1,000 rupees, then definitely invoice should be issued immediately. Suppose example 1,51,700 rupees service I provided. So he paid 1,52,000 just to round it off. So 300 is extra. So it falls within 1,000 limit. Then I can issue a fresh invoice or I can issue adjust in the next invoice. So it's choice. Next thing. Now we understood about advance. The next point is reverse charge basis. Section 13, subsection 3 talks about time of supply in case of reverse charge. Here only two items are there. The date of payment, right, or the date of payment, or I tell you 60 days from the date of issue of invoice. So take 61st day. Okay. Now reverse charge means basically, suppose example a company is there. Dell company is there. Dell company actually takes legal consultancy services from some lawyers. So in that case, who is the provider of service? The lawyer is the provider of service. Dell company is the recipient. But what happens is GST will be charged or GST is to be payable by Dell company, the recipient. Right? In that case, section 13, subsection 3, time of supply in case of reverse charge will apply. What should be considered? The date of payment. What is date of payment? Date of payment is date of debit in the books of accounts of Dell in our example, and date of entry in the books of accounts of Dell. Right? Date of debit in the bank account and date of entry in the books of accounts of Dell, the receiver of service. Okay? These two you should check and say whichever is earlier. But third one is also there. From the date of issue of invoice. That means when the lawyer issued the invoice, correct? When the lawyer issued the invoice, ignore the date of invoice, and after that 61st day you count, right? Whatever date comes, that date, payment date, whichever is earlier, is the time of supply in case of reverse charge. Whenever you study a topic, you see the word supplier, you see the word recipient, you'll get confused. Write stories. Like I said, Dell. Dell is the recipient, lawyer is the supplier. Nice example, right? So similarly, you have to write the stories. You create your own stories that will actually improve your thinking capacity. Okay. Now come to the next part. If suppose this data is not there, right? Invoice is not there, invoice is not there, payment date is not there, then only you found entry in the books of the recipient. Maybe the lawyer is not willing to issue invoice. Correct? So when it is not issuing the invoice, Dell did not make actual payment. But Dell is supposed to make the payment, correct? So Dell recorded in its books. The government said that's sufficient. The entry in the books of the Dell itself is treated as time of supply. That date itself is considered as time of supply of service. Now 13 subsection 3 understood. But one more point is there. Suppose example, I took some services from outside India. Like example, I took Microsoft 365 subscription. Now is Bill Gates my relative? No, right? So unrelated person I took the service. Now will Microsoft pay the GST? No. So in that case, on reverse charge basis, I only have to pay. So then 13 subsection 3 normally will apply. That is date of entry in the books of accounts, the date of debit in the bank account, here also debit, okay. And third one, 61st day from the date of invoice. Whichever is earlier will apply. Why? Because I am importing the service and the receiver, that is me, and Microsoft are not at all related to each other. But suppose example, I created a company in Mauritius in the name of GNC EduTech Private Limited. Now, if I am taking some service from there, I have to pay tax on reverse charge basis. But GNC EduTech is my associate enterprise under section 92 of the Income Tax Act. Then whatever date of entry in my books of accounts, right, or the date of payment, that is, I will make payment, correct, when I took service, whichever is earlier should be considered. So what did you understand? If import is from an unrelated person, 61st day from the date of invoice is also considered. But import is from associated enterprise, the date of payment is considered. Right? Date of entry in the books is considered. But 61st day from the date of invoice not considered. Okay? This is the slight difference between the two. Import from unrelated, import from associated enterprise. So reverse charge complete. Section 13 subsection 3. Now 13 subsection 4 is quite common. You got a naturals voucher. So you can show the voucher and take some saloon services. So it is identifiable with a specific service. So the date of issue of invoice is treated as the date of issue of, voucher is treated as the time of supply. If you have a general voucher, right? If you have a general voucher, you can take any service. In that case, the date of redemption of voucher. Okay. 13 subsection 4. 13 subsection 5 also, Same like 12 subsection 5 only. Residual. If you have filed the return, the date of filing the return. If you have not filed the return, the date of payment is the time of supply. Same. 13 subsection 6 also like 12 subsection 6 only. Late payment, interest, penalty. The date of value addition, that is the date of payment of this type of payments. Like when you pay the interest, when you pay the late fee, when you pay the penalty, right? At that time, the time of supply arises. So when you talk about subsection 4, subsection 5, subsection 6, these are same in goods and services. Okay, right. With this, we completed the time of supply of service also. Now, we have to discuss section 14. So, if there is a change in the rate of tax, then what should be the time of supply? Because many a times what happens that suppose on 1st July there is a change in the rate. Invoice may be issued before that, or sometimes the payment may be after that. Maybe invoice and payment both are after that, but the service or supply of goods have been done before that, right? Or sometimes, are you able to understand? It can be any type of combination, right? Service or goods supplied before or after, invoice payment may be before or after, right? Any type of situation may be there. But if all these type of situations are there, how will you tackle? What should be the time of supply in case of change of rate? Because ultimately, all the businessmen will be thinking that how can I save the tax to the extent possible? I'll tell you. Mobile phones, the GST rate was 12%. Government declared from this particular date, it will be 18% now. Now what will happen? Whatever sales happen after that date, the businessman would be interested to at least show some part before the change so that they can save some tax for them, for customer also. So considering all these situations, government has to make the law, and they came up with section 14, time of supply in case of change in the rate. Now what are the dates which are important here? Here there is no much complexity, but still here 4 dates are important. Okay, one is the date when the rate changed. Second, the date of invoice. Third, the date of payment. Right? The change in the rate, the date of payment, the date of invoice, and the date of supply of goods, or we can say the supply of service. So these are the 4 dates which are important. Suppose example, the change in the rate is on 1st July. If the rate changed on 1st July, the supply of goods is also before, the payment is also before, invoice is also before. Will there be any complexity? Obviously no complexity. So, because it is good, section 12 will apply. Suppose 1st July the rate changed and supply of goods after 1st July, the payment also after 1st July, and the invoice also after 1st July. Then no problem. Whatever normal rules as per section 12, that will apply. So, if payment, invoice and supply, all three are before invoice, then also normal rules will apply. All three are after the change in the rate, then also normal rules will apply. But when the problem comes, The problem arises when some are before, some are after. Right? Now, let me tell a simple one-liner to you so that half of your tension will be gone. Right? The one-liner is notification number 66, 2017, dated 15th November 2017. That means in case of forward charge mechanism, date of payment is irrelevant. I said or not? So in case of change of rate of goods, like I gave mobile phone example, the date of payment is irrelevant. So that means only invoice is left. So whatever is the date of invoice will be the time of supply in case of goods. Right? This is analysis. This is crux of the matter. Okay. We'll discuss the whole table, whole content. Don't worry. But why will you unnecessarily use your brain and then come to a conclusion and read the notification at the end and say, Array, I did unnecessarily all these analysis for goods. Because for goods, no analysis required. Here, even section 31 is also not applicable for section 14. They don't even consider section 31. Right? So simply the date of invoice will be treated as the time of supply in case of change in rate. Okay? And this is only for goods. For goods, date of payment is irrelevant. Only date of invoice is the time of supply. That's it. Close this chapter. For service, we are going to study this whole page. Only for services, we are going to study this whole page. What they said. Now, is the service provided before the change in the rate? Is the services provided before the change in the rate? If the answer is yes, then we'll check when the invoice was issued, when the payment was done. Right? If suppose invoice and payment both are done before, then normal section 13 would have applied. Because service is provided before and payment and invoice also before, section 13 will apply. But if service is provided before and payment and invoice both are after the change in rate, then section 14 will apply. And in that case, the date of payment, date of invoice, whichever is earlier, the date of payment or date of invoice, whichever is earlier, will be treated as time of supply. But suppose example, the service is provided before the change in the rate, payment also received before the change in the rate, but invoice is generated after the change in the rate. In that case, the date of payment is considered as time of supply. Suppose example, the service is provided before the change in the rate, the invoice is issued before the change in the rate, payment is done after the change in the rate. Then what to do? Simple. The date of invoice is the time of supply. So what did you learn in this story? The story is if service is provided before and both are after, that means invoice and payment both are after, then whichever is earlier of the two, that is invoice or payment, whichever is earlier you will take. Okay. Now come to the second story. If service is provided before and either invoice or payment comes before, then whatever comes before, that should be considered as time of supply. Right? Right. If all the three are before, anyhow section 13, correct? But if invoice is before, payment is after, then take invoice date as time of supply. If payment is before, invoice is after, then take payment as the time of supply. Like this, you should be able to interpret. Now, if there is a change in rate on July 1st, service is provided after that. Service is provided after that. Now, service is after the change in the rate. If suppose payment and invoice are also after the date, then obviously section 13 will apply. But if invoice is before the change in the rate, payment is after change in the rate, then because service is after, payment is after, payment is date of payment is the time of supply. Right? If suppose payment is done before the change in rate and invoice is issued after the change in rate. Now service is also after, invoice is also after. So that's why date of invoice will be the time of supply. So whenever you see in a problem, there is a change in rate. One thing is clear, that the time of supply will be either invoice or payment. Either invoice or payment. Correct? So this you should be clear. Suppose the service is provided after, but payment and invoice both are before, then what to do? In that case, whichever is earlier concept should be applied. Right? So see, if you draw a center line and you write change in rate, right? Invoice and payment is before that, then obviously earlier of the two. Right? Payment and invoice are after that. Right? Then obviously the rate will apply. Correct? 13 will apply. Like this, you should be able to interpret. Till if you are thinking that it is difficult, then please read the text once. You will definitely understand. Right? What is said? Please again and again try to concentrate. Draw the line. Right? If service is after, invoice payment are after, section 13 will apply. If service is after, but invoice payment are before, then whichever is earlier. But suppose invoice is before, payment is after, or payment is after, invoice is before, anything like that. Whatever is matching with the service, that should be considered. If you simply understand this, then job done. Okay? So this is ultimately the whole concept of section 14. Now date of payment everybody know. Date of entry in the books or the date of credit in the bank, whichever is earlier. This whichever is earlier will apply up to 4 days from the date of change in the rate. Whichever is earlier will apply up to 4 days from the date of change in the rate. But after the 4th day, only the credit in the bank account should be considered for the date of payment. After the 4th day, only the credit in the bank account should be considered for date of payment. That means entry in the book should be ignored. Entry in the book should be ignored. Right? This you should be able to connect with. Okay? And I already said, in relation to goods, the date of payment is irrelevant. So in relation to goods, the rule is simple. The date of invoice is the time of supply if there is a change in the rate. Okay? And in relation to service, before, after game, you should be able to follow. Okay? Right? Please remember, if all the three fall one side, regular sections, that is 13 will apply. If one falls this side, one falls that side, whatever is with supply of service, that will be the time of supply. If invoice is with time of supply, date of invoice. Payment is with time of supply, payment is the time of supply. Okay, right? If time and invoice both are opposite to the supply of service, then definitely remember that whichever is earlier, invoice or payment, whichever is earlier. So with this, we understood all the provisions of time of supply. So you understood section 12, 13, 14, that is time of supply and time of supply in case of change. All concepts we tried to cover in this video. So do like, share and subscribe to the video. How did you feel these concepts? Please comment below and share with your friends and colleagues so that they can be benefited with these concepts. Right? Chalo, we'll meet in the next revision video. Till then, take care. Bye everybody.